Hi, welcome to Control and Compound. In this episode, we're going to give our February monthly update, let you know what's going on in the industry, Bitcoin, real estate, interest rates, all the updates you need to know about. Hi, everyone. Welcome to Control and Compound with Darren Mitchell. I'm your host, and joining me today, as always, Christina Wyatt. Christina, how are you today?
Hey Darren, I'm doing great. How are you doing?
I'm doing great. So let's talk about the monthly update before we get going. What do you have to say?
Oh, my friendly reminder that if you're listening on your favorite podcast platform, you're going to want to hit that subscribe button and leave the 5-star review. If you're listening on YouTube, make sure you like, subscribe, and hit the bell button so you always know when new content is coming out. And make sure that you're following us on TikTok and Instagram at Control and Compound.
What a spectacular little plug there. Thank you. That was, just for behind the scenes. We keep forgetting to mention YouTube, and we started mentioning YouTube the last few times, and our YouTube subscribers are going up. So thank you for that. Okay, Christina, let's start with probably the topic that a lot of people are keeping a close eye on, and that's interest rates. What's going on with interest rates in Canada since we last chatted on our update?
Yeah, so we had our first 2023 increase. Bank of Canada announced a 25 basis point increase back January 25th. So just recently we saw that increase up to 4.5%. So that's where we're sitting at right now. I know that one was kind of back and forth, but a lot of people thought that we were going to see that interest rate going into 2023. So shocking for some. I kind of saw it coming, but we'll see where it goes. But 4.5 right now. And then we also saw the U.S. Kind of follow along, and they went from 4.5 to 4.75%. So they are 25 basis points ahead of us, but kind of following the same lead.
Yeah, a couple things to note on that. The consensus tends to be, and even the commentary. Oftentimes when the Bank of Canada announces a rate, they look for the rate, but that's kind of expected. They look for the commentary to kind of say, okay, what's the future look like? And by all accounts, they think we're either at the limit or near the limit of increases, and then we'll start to see that come down. Because when they do an increase, it really takes about 9 to 12 months to really kick into the economy. So all those rate increases that we saw in 2022, those are really just kicking in now. So if they do their job and they drive down people borrowing money and buying properties and valuations, then they're going to achieve their goals. So the expectation is we're kind of at the peak or near the peak, and then we'll see a decreasing sometime in 2023. And
Yeah, I don't think it's going to go down by very quickly though. People expect, as soon as it stops, we're just going to shoot down. Like, no, I was listening to something the other day when they brought up the 80s, and it took from till 2008 to kind of get back down to that 6% mark, right? So I don't think it's going to happen very quickly, but it'd be nice if we held here and then kind of made our way down slowly, but we'll see.
yeah.
We don't have that crystal ball.
So a little bit of good news there, and then we also had some good news for those invested in the stock market. We had the Canadian market S&P TSX up 7%, or a little over 7% in January, and the S&P 500 up 7.7%. So that was a big bounce. Now again, a lot of economists, a lot of banks are saying recession, bad times coming in 2023. So I think this is for those that haven't readjusted their portfolios to plan for this upcoming downturn. This is going to be a great time for you to revisit that, because now you've got that maybe momentarily increase in the values, and it might not stay throughout the year. So talk to your advisor about positioning yourself correctly for 2023 if you're in the market. Anything else on the markets, Christina?
No, I think that's about it. Something to watch for sure. We've got the word recession buzzing out there, so I don't get too hopeful very quickly, but I'm sure that a lot of people are liking that. That's a nice start to the year for them following that negative 20 at the end of 22. So starting to see that bounce back. In other positive news, though, we also saw Bitcoin have a bounce back for this first month of 2023. So they went up 43%. So that's a nice little jump on that side too. So we do have positive news. 2023 is not all bad, right?
Yeah, that was great. Bitcoin up 43%. Amazing. And then mortgage rates, we haven't really seen an increase in mortgage rates with the latest Bank of Canada increase. And again, mortgage rates, GIC, long-term GICs are more indicative of the bond yield, where they expect bond rates to be. So the anticipation is that rates will be lower. So we're not seeing a big change in the mortgage rates. And then the GICs, it's what's going on with the GIC, the longer-term GICs.
Yeah, so when we looked at GICs back in December and just looking at one of the companies, as a comparison, they had a 1 year at 5.06 and now they have their 1 year at 4.55. So to me, that sounds like things are going to mellow. They're not looking at as high interest rates as what they expected, and they're kind of backing off a bit on what they were offering. So that does, to me, that sounds like interest rates after this hike will start to simmer down, maybe even decrease a little bit. But yeah, their 5 years still 4.4. Their 5 year is 4 now, was 4.4 in December. So still less than what a 1 year is, which again shows that long term, they're not expecting to see these high interest rates forever, right? By year 5, they figure it's not going to be the same. So kind of shows that if they're making their moves to show lower interest rates, that could be indicative of what's going to happen this year and going on to, future years.
Okay, love it. And then I read an interesting article about the housing prices. The Canadian Real Estate Association predicts a 6% drop in the average Canadian home price for 2023. Now, again, 6% nationally is it's relevant, so we can have a conversation what real estate's doing overall, but it's really not relative to each individual area of the country, because 6% is for the country. We're going to see big swings, big differences between regions, and typically it's the regions that bumped up the most are gonna see a little slight drop. So what happens in Toronto or Halifax or Vancouver or Edmonton or Saskatoon could be vastly different. So make sure you know your area, see what's going on, and get the stats for your area where price expectations are. But again, not fantastic news in the real estate market. If you're looking to sell, if you're looking to buy, maybe it's great news.
Yeah, it creates opportunities, right? I think that real estate investors out there are going to change their strategy for this year. They might not be doing the BRRRR method as much with the interest rates the way they are, but you might be able to get a really good flip with a good price on a down market. So there's lots of opportunity out there. Just kind of maybe a mind shift of the strategy that you were doing previously. Switch it up to go with the market, move with it, right? Pivot.
Yeah.
Pivot.
Yep. Absolutely. Just be aware of those new flipping tax laws too, though.
Oh, yes, that came out this last. Yeah,
flipper,
exactly.
That was a change. Yeah. Okay, Christina, what about control and compound? What's new and exciting with control and compound?
Well, we're growing, which is always exciting. I love when we have new people in the office, and we have 2 new people joining us this month, which is super exciting. So we had Grace start with us this week. So, for our clients out there, if you hear from Grace, make sure you welcome her to the team. You are probably going to, hear from her at some point. And then we have another individual starting in a couple weeks. So super exciting times for us. We always love to see growth, which is exciting.
Growth is fantastic.
Thanks for listening so far. If you're watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content is coming out. If you're listening on your favorite podcast platform, please leave a 5-star rating and leave a review and subscribe. And if you are interested in learning more, please visit our website at controlandcompound.com to sign up for a free education session with one of our wealth coaches.
And then what else do we do it in control and compound, Christina? Now, you're going to say something, and then it's like, well, it's one of those things. If you have goals, just tell people what your goals are, and then they're out there, and then you have to hit them. So, Christina, what else is control and compound going to do this year?
Yeah, so this is my accountability, everybody. Everybody that's listening, I've decided we're going to do this. I would like to we are going to get a client portal set up for all of our clients that are going to allow lots of resources on there. Obviously, we're going to have lots of calculators, resources, things like that. Another thing that I want to have added, though, is something like almost like a bulletin board where clients can interact if they want to. You don't have to, but if you want to interact, we have a lot of individuals that do want to, have discussions with like-minded individuals. And this might be a way for us to be able to make that happen. Should you want to, don't have to, but, that is, it's moving. I started it in January. I'm hopeful, hold me accountable, everybody. By the end of this year, it's becoming reality. Has to.
All right, there you go. Fantastic commitment. I love it. So that's what's going on with Control and Compound. And then, Christina, we've had some great listener feedback. We get some questions from time to time. Sometimes we'll answer directly. Sometimes we'll say, "Hey, that's a really good question. Why don't we address that on the podcast?" So what's a good question we had from a listener this month?
Yeah, so I'm going to read this one straight off here. So I'm new to real estate investing and I signed up for mortgage insurance for my rental property I purchased in 2021. I feel like it's a good option for me at this point because it's a deductible expense versus a life insurance product that is not. I'd love to hear your thoughts on this. So thoughts on this, Darren?
Yeah, we had a lot of questions on the term versus the mortgage insurance discussion we had. For me, it's so simple a decision. If you can qualify for term insurance, I believe it's a million times better. And let's just talk about a couple of the things. What happens if you have mortgage insurance and you pay down your mortgage? You pay down $50,000 or $100,000. You just gave up $50,000 or $100,000 if you die versus the term insurance. What happens at the end of that term if you decide, I want to switch banks or lending institutions to save 1% or 1.5% or better terms or whatever it is you like? Well, now you have to re-qualify with that new carrier for your mortgage insurance. And if you're not insurable, you simply can't do that. So you make a lump sum, you lose that money. You can't qualify, you lose that money. You have to stay with the previous lending institution. And then the cost, and forget about, let's not forget about term insurance almost always pays, right? Like term insurance, 99.9% of claims are paid. There's only people that absolutely lie about having cancer or something. Mortgage insurance hopefully pays, but they don't actually review it until that time you actually die. And again, there's huge law firms that specialize in suing banks that don't pay for mortgage insurance because the bank doesn't actually review the claim to the mortgage. And then if you look at cost, there was a nice stat we saw the other day. The average Canadian, so this is the average, this isn't, some are bigger, some are smaller, but on average, to switch from mortgage insurance to term insurance, the average Canadian saves 46% on their premiums. So the average goes from $67 for mortgage insurance to $36 for term insurance, 46%. And again, we've seen bigger spreads than that. And then the last part is, well, with term insurance, if the lending institution sends a letter saying, yes, this person is required to have that, and we have this a lot on corporations, business deals, buying out partners, loans to buy stuff, the banks will say, hey, you need to have that insured. And it's pretty simple to get a letter from a bank for that. And if you do that, your term insurance is also tax deductible. So, even if it wasn't, I'd still think term insurance is a million times better. But if you can get that letter from the lending institution, then your term insurance is tax deductible. Now, technically, it's net cost of pure insurance, but again, topic for another day. But roughly, your term insurance would be tax deductible. So, I don't see a situation where if you qualify for term, why you'd ever buy mortgage insurance. And again, sure, we're biased, but just I've seen mortgage insurance not pay, and that is just a nightmare for the family.
Yeah, and you're kind of short-term sighted in your savings, right? Because just because you're getting that tax deduction, if you did, let's just say that it was $500,000 and you paid down $250,000 and then you pass away, you get 250. Did you save $250,000 in tax deductions? I don't think so, right? So it's a little short-sighted when you think of it. And, we can, like you said, if we get a collateral assignment, we can get it, we can do the same. But even with the savings, by the time you cut it down, I think it's all equal, except the product's much better on the term insurance. It's not all equal. Like the monthly price comes out to about equal. And then all of the other benefits on owning your own term insurance are much, much better. There's no place or world where I would say that it's better to get the bank insurance ever. Like even for the tax deduction, not, because there's just too much of a liability to it not paying and none of the benefits that come with owning your own policy.
Yeah, and I mean, like I have term insurance that I have to cover mortgages on income property, and I have obviously a whack of whole life with a huge death benefit. But you know, I plan hopefully to leave some properties to my kids, but I don't necessarily want them to pay off the mortgage when I die. Now, maybe that's what they want to do with the term insurance, but what if, you know, the kids are invested into real estate and they like it and they go, well, why would I pay off all this mortgage? Why wouldn't I go buy 2 or 3 more places? Maybe I'll put some down on the mortgage, or maybe, you know what, maybe my child's in a business that they, you know, all of a sudden they could use that money to grow their business to make 10 times more money than it would benefit them versus paying off the mortgage. So just those options of doing whatever the family wants with the money instead of paying off the bank. So the bank's interests are served by mortgage insurance. Your family's interests are served by the term insurance or whole life instead.
Absolutely.
All right, Christina, think that's it for the month.
Nope. I got a couple more things. I just want to tell everybody about the podcast that we had last month. So a reminder, if you missed the podcast that came out last month, you're going to want to check those out. We had a great goal setting podcast that came out. We also had 2 of our real estate series come out. So we had the pre-construction and we had the private lending. So if that's something that you're interested in and you want to learn how to combine that with infinite banking, you're definitely going to want to go back and check those out. And then just last week, we had the Master Keys guys on our podcast, which was awesome. So we've had some good guests to check out. And then coming in February, we have a lot more going on. We've got our real estate series that's going to continue flipping. So we're going to look at flipping and infinite banking. We're going to look at whole life versus RESP for kids. So that's a big one. A lot of people ask us where they should be saving for their kids' education. So that's definitely going to be one of the podcasts that you want to check out, and a couple more things along the way. So make sure that you subscribe and you get those updates for when the new podcasts come out.
Yeah, and just one more note on that. Christina and I were lucky enough to be guests on the Master Keys podcast as well. So if you check out the Master Keys podcast or listen to them, they're a great real estate investing podcast. The episode, I think the last week of January, is Christina and I being interviewed by the Master Keys hosts. Great guys. Encourage you to check that.
Yeah, Chandler and Neil, they're awesome. Yeah, you want to go out and check them out.
And then my commitment is we did a little live shoot this week when I was in the studio this week, and we recorded a new webinar specifically for real estate investors with infinite banking. And that's going to come out in February, so we'll send some notices out when that comes out. But new webinar coming out just for real estate investors, how to use infinite banking with real estate investing. So check that webinar out when it comes out. I think that's it, Christina.
That's a wrap, Darren.
Awesome. Thanks for watching. Thanks for listening. Really appreciate the feedback. Keep it coming. Thanks so much. Have a great day. Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controllandcompound.com, and you can sign up for an education session with one of our wealth coaches.